Hi Mortgage Heroes, Andy Cruz here in Business Development, and this is your weekly video newsletter. Thank you so much for tuning in this week. We've got a couple of topics to cover, but before we do, if you're watching this on YouTube, make sure you will subscribe to the channel, you hit that like button, and turn on the notifications so that you're notified first every time we drop a new video. Well, let's just jump in right to today's topics. First, we need to talk about mortgage rates on the rise. Now, last week we gave a very extensive overview of how we got here, what's happening in the marketplace currently, and then how you can prepare moving forward and which options are available to you in this space, whether that's a rate and term refinance or a cash out refinance. Now, since we dropped that video last week, things have kind of been a little bit lazy as far as pricing is concerned. It's ebbed and flowed a little bit, gone up one day, down another, and it has not made a big parabolic move higher. However, it is showing signs that it is not returning to the low lows we once knew just months ago. Of course, as we discussed last week, this has a lot to do with the Fed and their discussion of tapering and when they're going to start backing out of the market, contributing less, which has been artificially keeping rates low. And that is kind of still where we're at. There is some sentiment starting to brew that they could begin stepping out of the market as soon as November, which now is just a couple of weeks away. So it's fair to expect that we're going to see an increase in rates in the coming weeks and months ahead. What that means for you is if you're trying to lock in a loan now, it's better that you do that today than wait for tomorrow. You know, years ago, I had a client who was really struggling trying to make the decision on when to lock their loan, and I simply asked this one question. I said, would you rather lock your loan today and be upset that it's lower tomorrow? Or would you like to float your loan today and be upset if it's higher tomorrow? And ultimately, his decision was to lock the loan today because the old adage is, a bird in the hand is worth two in the bush. And you may not necessarily agree with that assessment or that conclusion, but it's a fair question to ask right now because of what we know happening in the market. Now, amidst all the talk about interest rates increasing, and I've been hitting you guys hard with the inflation and unemployment data and all that, but I want to make a pit stop really quick at some good news, which is that delinquencies and forbearances are going down. Now, this has a lot to do with the moratoriums that are ending, or that ended back in September and ending for lots of people who were in them for months on end. And we knew that that was going to happen to a degree. The interesting thing is that a lot of people ended up getting loan modifications or workout programs like we had discussed months ago, where either the amount you owe is tacked onto the end of the loan, or your rate is reduced with your current lender simply to bring it back into the affordability range of what your income can qualify you for every month. And it looks like a lot of that has helped save hundreds of thousands of people from getting into the foreclosure pit and eventually losing their house. Now, the interesting thing about this is going to come months down the road when we see the economic impact of the employment on the forbearance and the people that just came out of moratorium. As long as they can continue to work and that they're paying their bills, then there should be no imminent threats, and then the delinquencies going down will continue to just be a shining light in what was an absolutely chaotic and crazy housing market in 2020 and 2021. Now, lastly, as you guys saw, we had a lot of reconstruction and remodeling going on at our physical office, but we've also been changing things online as well. You probably noticed that we've had an increased rate of Facebook posts sharing information, more economic data, further explanation that has been coupled with our new online weekly blog schedule. Now, that's actually coming into our new website, which is mortgageheroes.com. For many years, you've known us as Your Mortgage Heroes or VA Eligible, and now that's all come under one roof to mortgageheroes.com, where we're going to continue to publish articles with a little bit more in-depth review of what's happening, how to win in real estate and mortgage so that you can make the most out of your home ownership. And we can share a lot more information that is sometimes a little bit more difficult to explain in these type of shorter form videos. So if you have not yet followed our Facebook page, please do so. Subscribe to the YouTube channel and make sure you check out mortgageheroes.com, where we're going to continue sharing more information that is extremely valuable moving forward into some uncertain times ahead for real estate and mortgage. As always, please feel free to share this video with someone you know who might need to benefit from this information, and let us know if you have any questions. You can write a comment wherever you're seeing this video. You can send us a direct message or shoot an email to your loan officer and reach out and let us know how we can help you take advantage and maximize your home ownership to all of its benefits here in San Diego and abroad. Thank you so much for watching. Have a great week, and we'll see you again next week.